Hello, it's Mr. Intermarket Analysis, bringing you the review of the FTSE 100 for Thursday's trading, 28th of November 2013. Okay, so going into tomorrow, let's discuss what happened today, Wednesday the 27th. Obviously, let's see what happened today, and let's see how the market played out. Okie dokie. Right. Okay, tricky. Basically, we had a bearish engulfing candle yesterday. The market obviously sold off quite substantially. The market obviously is consolidating in the lower 25% of the red candle. Therefore, the bears are in control. Given the fact that obviously the commodities got hammered today. Obviously, gold is down, copper's down quite significantly now, and oil obviously got hammered as well. Okay, so certainly not looking good, ever since Mr. Carney came out with yesterday's comments of weaker growth with regards to the UK. Although, having said that, sterling is making a new high. So, at present, I mean, the way in which I'd put this week and sum up this week, given the light volume and the Thanksgiving holiday, etc. in the US, there's a lot of distortions in this market right now, especially with regards to intermarket analysis. And with regards to the price action as well right now, can it be trusted? Obviously there's a certain element no, because of the fact that we have light volume and there's not many people on the trading desks, and the pros and the big boys aren't around as much as they normally are. Okay, and the Yanks aren't participating as well because obviously they have quite they have their view in the markets as well. So it's interesting. Certainly interesting. So there's a lot of divergences out there as well in terms of fundamentals. So today, basically, what happened? We had some economic data out in the UK. Some was relatively strong, other was relatively weak. We obviously had the German confidence data in the morning. Obviously, that caused a rally higher. And I'll explain the micro time frames with regards to my trade because I was bullish yesterday. Especially when the FTSE was around the 6630 level, 6640 level, and we did have a rally. So okay, so basically let's just sum up the daily chart. Okay, daily chart consolidation, given the fact that we had sell-off yesterday. Historical support or previous resistance equal support is at 6630, and previous horizontal support here as well. We're still in a downward sloping expanding wedge pattern, which is being obedient so far. Obviously we have a bearish continuation pattern. Okay, so you got a red candle and consolidation, red candle and consolidation, next move down lower. We could well test the 200 MA below. Okay, so in terms of obviously drawing your support lines or horizontal support lines, we can certainly do so. Okay, let's have a look here. So there's certainly a horizontal support line there, and there's certainly one there. Okay, so that's a downward projection. That's quite a substantial sell-off, to be honest, given the fact that Kiwi was down, the Aussie was down, sterling's higher. So obviously with the sterling rally the way in which it has, it's certainly hurting the export sector. Okay, and the economic data that did come out today did say that the exports were down to -2% plus, and that's obviously due to sterling appreciation. Okay, so that's a bit of a tricky one, even though yesterday's comments from Mr. Carney were very dovish. So again, real puzzling factor, obviously given the sterling's rally. Now sterling has rallied, yet Aussies failed to rally, Kiwis failed to rally. Okay, I understand Aussie had the RBA involved and they want to lower the currency, and obviously the Kiwi as well, they are individuals want to lower the currency, but Australian data around last 2 days has been strong, and so has the Kiwi data as well. So especially last night, the Kiwi data was very when I say Kiwi, I'm referring to NZD USD, and NZD versus any pair really, because it's just regards to New Zealand. So the Kiwi data has been quite strong. Okay, and even the European data was relatively strong. So if anything, the euro should have had a sustained rally, which it didn't, and didn't confirm the rally in sterling, which again leads me to believe that we have a light volume short squeeze phenomenon going on in sterling, and which obviously is hurting the FTSE at present. And obviously the FTSE is failing to move higher along with its peers. I mean, Nasdaq made a new high. Again, into market analysis states that Nasdaq is a leader, therefore it should propel every other global market higher, which has failed to do. I mean, you had the Italian index up today as well, Spanish Euro stocks as well, going, moving to lofty heights. DAX, the CAC, yet FTSE struggling. Strange, very very strange right now. Okay, so Obviously we keep relating to price action and sort of take our cue and guide from there. Okay, now let's go to our FTSE 250 chart. Okay, and this is another strange phenomenon. The fact that the FTSE 250 broke out, and I'll explain this last night. My last night's video, this is the basis on which I wanted to go long the FTSE, and I expected the FTSE to rally from 6630, 6640, which it did. Okay, so obviously the rally did occur because we went as high as 6655, 6660. And we certainly did rally. So obviously that my analysis was correct, and obviously the accuracy is there. But again, very strange phenomenon. Okay. Commodities are getting hammered. So the two factors against FTSE right now are sterling appreciation and commodities. Okay, commodities are getting smoked right now. Okay, so but now that FTSE 250 is into resistance, we have a real problem right now. Okay, so obviously the FTSE 100 would obviously, given the fact that it's the weakest link right now, slight problematic. Okay, so excuse me, folks. Always tired. Honestly, day trading mentally draining. Okay, so. Here we go. So we are looking at a 10-minute chart of the FTSE. Let's just go to a 60-minute chart first. Always obviously get macro view and then zoom in. Okay. So yes, so we had a bearish channel. We broke out the bearish channel, and really, I can't really no more bearish channel now. I'm getting rid of this, folks. Okay, get rid of this. Inverted head and shoulders, like you already know, is failed, given the fact that we failed to hold a 75%. So when you have a failed pattern, what happens? You have an emotive move in the opposite direction. The markets go lower. And that's exactly what's been happening ever since. Okay. Now what else are we looking at here? Excuse me. Okay, so here we go. Okay, so we've broken these two key levels. Okay, so you had a symmetrical wedge pattern here. The market moved lower. You had a key trend line support here. The market moved lower. So obviously technical analysis states previous support equals resistance, and that's exactly what we're doing right now. Okay, so interesting day once again. So that's exactly what we're doing right now. Okay, so this is basically the market that we perceive and are looking at and observing at present. Okay, so certainly keep an eye out for that. Okay, so interesting times indeed. Okay, so basically what happened today. So yeah, so the market obviously rallied to 6660 and it touched previous support equals resistance, came down. You have a Fibonacci retracement here at 38 to 50%, which is being held and being respected. Okay, you have previous support equals resistance, which again is being held and being respected. Okay, so keep an eye on that. So this is a resistance level. So obviously I took the long trade as well. I was long last night, as you know my video. I managed to get out break even more or less. I didn't really gain much out of that, to be honest. And then obviously, with regards to FTSE at the moment, I'm short on the FTSE itself. I did have a DAX trade long, and I had a Euro trade long, which I closed at plus 25. So it wasn't that spectacular, to be honest with you. And then I eventually did go long FTSE again, which I'll explain shortly. But for now, a guide for yourselves, anybody who wants to see exactly what the FTSE is holding. Watch out for this level here, 6660 and 6670. Okay, that's master, well not master, but basically it's a great wall of China for the FTSE. And will fail to penetrate. So from my perspective right now, we have series of lower lows and lower highs. The FTSE itself is making a bear flag formation, and obviously we go lower. The next level is 6610. Okay, that's exactly where the FTSE is headed next. Okay, on the 60-minute chart. Let's go to our 10-minute chart, see if we can see any pattern here. Okay, so with regards to the FTSE itself, obviously as you know, I went long overnight. Market rallied, got as high as 6660 level. I got out break even more or less, I think around 6650 region. And the market sold off. Okay, I then got long again on the FTSE because you had an inverted headage. You had an inverted head and shoulders pattern. Left shoulder there, inverted head. Okay, right shoulder there, and obviously off we went to the races. If you take their neckline there, 6638 to 6648, it was a 10-point projected target. We went as high as 6665. I managed to get plus 18, plus 19, plus 20 out of there overall, and now I'm short the FTSE. Okay, so I mean this week's been a good, spectacular week. I mean 187 points and counting at the moment, and obviously I'm plus 20 on the FTSE short already because I got a good average around the 6660 region. Okay, so yeah, I mean I've already crossed 200 points and it's only been 3 days trading, so I mean it's good. Like I said, come and join me. I encourage everybody to come and join me. Anybody, your friends, family, anybody who wants to trade, come and join me. At the end of the day, I mean, if I can prove to you in real time that I'm exceeding 200 points a week, like I said last week, spectacular week. This week, spectacular week. This month, spectacular month. Almost 1,000 points. Well, exceeded 1,000 points already in the last 4 weeks trading alone. So life is good. Life is good. It's all about hard work, dedication, commitment, so on and so forth. Okay, and you'll do well and you'll succeed. Okay, so I also have a mentoring program. So not only do I help individuals with the live analysis service by guiding them and helping them and giving my insight and my thought process and my analysis in real time, because what you're seeing right now, folks, that's exactly what I send the subscribers out. Okay, in real time, I give them live entries, live exits, live trade management. Okay, and I give them insight as to why. I give them fundamental reasons as to why the market's going to sell off. I give them technical reasons like you're seeing right now. Okay, much more detail, live commentary, so they're seeing everything in real time play out. Okay, and the best way to learn is real time. Okay, you can't beat real time. That's what you know. People pay £1,000 a day for a mentor, and what do they teach you? Basically, regurgitated information from a textbook. That's not learning. Okay, learning is learning from somebody in real time. Okay, just like any sport that you play. When you play sport, you have to actively play the sport. Okay, in order for you to be better. When you play badminton, like I was playing last night, I had a doubles badminton last night. Initially, when I started off, I wasn't very good. I had a friend who was very good who taught me, and we kept playing, and now we play at a high level. Okay, same with squash. I play squash. I wasn't very good. I went to the National Squash Centre at Manchester City football ground. Okay, amazing squash centre, 1.1 million they spent on it. Okay, and there's Koreans there, Japanese, Chinese there, very very good squash players. You go there, you get mentored, you get taught, and whilst you're playing, they teach you. Same with football. You play football, the more you play, the better you get. And if you play with somebody who's better than you, you raise your game. Okay, so if you have competition, competition is healthy. If you have somebody who's better than you, he raises your game. So same thing with mentoring. A mentor is somebody who raises your game. Would you rather have somebody teach you in a Blue Peter type of way? Here's one I made earlier. Or would you rather have somebody teach you in real time? And there's no better way of teaching in real time by me sharing my trades. That's all I'm doing. It's not, there's no water off my back. It's not hard. From my perspective, what I'm doing is texting you my real-time entries, sending you analysis. Yes, it does take time. It is tedious. And sometimes, it's very tiring. As you can see, I'm always yawning whenever I make these videos. It is very mentally draining, but it's rewarding as well, because when other people are succeeding and they're becoming independent traders themselves and they're going solo, then yep, definitely rewarding. Okay, so on this occasion here, obviously, like I said, like I forecast yesterday in my last night's video, the FTSE would go higher. We did. I forecasted that this gap will be filled, which it did. Okay, and I said watch out for that gap. Where did the FTSE bounce? Exactly where I said. Okay, exactly to the absolute wick. Okay, to the absolute wick. Okay, so 6630 was your low. Boom. Okay, hey presto. So obviously we went higher. Where did we fail? Previous support equals resistance. Again, this is all technical analysis. Again, which I teach via the mentoring program. It's very important. The thing with technical analysis, folks, is it's a very subjective science, and it's very important that you learn from somebody or a mentor who can teach you properly. Okay, you can have 10 people have the same chart, and each one will draw a different trend line. Okay, there's certain rules regarding drawing trend lines, and you can only learn that in real time. Again, take the mentoring program. That's the only way you're going to learn. Okay, I do it a very cost-effective way. I only charge 300 when this course should technically be sold at 4,000. A lot of courses out there. Minimum you're looking at for a decent course, 2,000, 3,000, 4,000. I've seen the material that they teach. Okay, I've condensed that information, that material, and a lot of it is jargon and rubbish. You don't need it. Okay, a lot of it's noise, it's crap. Okay, but I condense it and I give you it in a digestible format. So a way in which you can, in a small time frame, within a 4-week mentoring program, you can digest, inculcate, implement, and obviously flourish by applying it in real time. Okay, and then obviously the live analysis then guides you in real time and continues the learning journey until you eventually are confident enough to fly solo. And goodbye, goodbye to you. I want everybody to be independent traders. I don't want anybody staying on the live analysis service. I want you all to learn and fly. Go enjoy yourselves, travel around the world, take your laptop with you, trade, and have a good life. Okay, financially very rewarding. What else can I say? At the end of the day, I do it myself. I try and get out and about, have a good healthy lifestyle. I play football, I play badminton, I play squash, I do boxing, I do running, I do cycling. you name it. Okay, so it's a good life. Okay, so got a wife and 2 kids now. They obviously they're away at the moment, so I'm a free man at present, but generally speaking, spend a lot of time with them and enjoy life. Okay, so watch my kids grow up rather than sitting in an office job 9 to 5 and scratching my head and thinking, when is it going to be 6? When do I get to go home and see my kids? Okay, so this is what this day trading can do, folks. It can give you independent, gives you a good life. Okay, so 10-minute chart here. Okay, so obviously we've had a bearish engulfing candle towards the close. And we've got this upward sloping trend line, to be honest, which will be negated, and we should go back and test a 6,630, and obviously gold probably most likely go lower. Okay, and probably test, well, 6,630 will be a solid support level for now, and we'll see exactly what happens with regards to that. But given the fact that commodities are getting smoked and US markets are struggling to go higher, even now Mr. Greenspan's come out saying that the stock market isn't a bubble. The absolute dimwit, he's the one who created the bubble, the moron. Okay, it's irony, isn't it? The chap who created the bubble comes out and tells you it's not a bubble. That's how stupid the American policy is, especially the central bank policy that goes around and destabilizes the world by annihilating the dollar and creating the Middle East chaos, etc., etc. Okay, folks, I think I've said enough there. Risk on, risk off, wax on, wax off is my motto. Take care and goodbye.